Hello once again, my name is Anupaman and you're watching Freedom English channel. So this is our exclusive coverage of Vishal Mega Mart's much anticipated IPO launch. Today we'll be talking about its launch and everything you need to know from the SWOT analysis, competitive analysis, financial performance and valuation metrics. Let's dive in quickly. The first strength of the company is extensive store network, a wide presence in Tier 2 and Tier 3 cities contributing to 65% of its revenue. The second strength is in-house brands that drives higher margins compared to reselling third-party brands. Another strength is cost efficiency. Bulk purchasing and strategic vendor partnerships ensures affordability of the company. Operational efficiency. It has a lean business model that reduces overheads and increases profitability. Let's also talk about the weaknesses. Limited online presence. It has heavy reliance on offline retail while competitors are leveraging nowadays on e-commerce. Another weakness of this company is vendor dependence. Over 70% of its inventory is sourced from third-party vendors, which can lead to supply chain disruptions. Now let's talk about the opportunities in the SWOT analysis of this company. It can look forward to have an e-commerce integration, launching an online platform to compare with omni-channel players like DMart and Reliance Retail. It can also get into the untapped markets, expanding into rural areas and international markets. Tech adoption. So it can adopt AI-driven inventory management and personalized marketing, new technology into the system basically. Now also let's talk about the threats. It has huge competition, faces intense competition from big giants like Reliance Retails, Avenue Supermarts, DMart and Trent Limited. It also faces challenges of shifting consumer preferences nowadays, so the rising preference for online shopping poses a huge challenge to the company. The economic slowdowns. Another threat can be economic slowdowns, so any slowdown can impact the consumer spendings. So overall, Vishal Mega Mart's strengths include its vast presence in Tier 2, Tier 3 cities and its affordable pricing strategy, making it a household name. However, weaknesses like reliance on a single demographic and inconsistent supply chain management could also pose a lot of challenges. Looking at the opportunities, India's retail sector is booming and expanding into e-commerce for Vishal Mega Mart can actually unlock immense potential. But threats such as rising competition from organized and online retailers and inflationary pressures on consumer spendings can't be ignored, of course. Alright, now let's compare Vishal Mega Mart with three key competitors: DMart, Reliance Retail and Trent Limited. So DMart leads in profitability and operational efficiency, with Reliance being an expert in diversification and digital integration. Meanwhile, Trent Limited has struggled with depth and liquidity issues. So Vishal Mega Mart carves a niche with affordability but needs to catch up with the e-commerce. Reliance Retail is the largest player in retail sector. It offers omni-channel experience through JioMart. It has strong financial backing and it allows aggressive pricing. On the other hand, DMart, focused on middle-income households with an efficient inventory turnover model, operates in a similar target segment but relies heavily on owned stores. So here we see the store count of Vishal Mega Mart comparing with DMart, Reliance Retail and Trent Limited. So we have the numbers on screen, like Vishal Mega Mart has 645 stores, DMart has 341, followed with Reliance Retail having the highest numbers, 17,000 plus stores in India overall. If we talk about the revenue from last fiscal year 2023-2024, Vishal Mega Mart's revenue crossed over 8,000 crores, DMart's revenue crossed over 45,000 crores, Reliance Retail's revenue crossed over 2,60,000 crores. Trent Limited, Star Bazaar operates premium supermarkets targeting affluent consumers. Let's compare Reliance Retail, DMart, Trent Bazaar along with Vishal Mega Mart. In this brief comparison, we'll take a look on store count, revenue and net profit margin. Store count of Trent Limited is 249. Revenue of Trent Limited was 8,000 crores. Net profit margin of Vishal Mega Mart is 5.1%. DMart's net profit margin is 8.8%. Reliance Retail's net profit margin is 6.2%. Trent Limited, on the other hand, has 4.8% of net profit margin. Now, let's analyze Vishal Mega Mart's financial performance over the last 3 years. So the revenue has shown consistent CAGR of 12%, but profits have been erratic. With a dip during the pandemic fiscal year 2022, net profit margins are slowly improving, hitting 5.2% in fiscal year 2023. Earnings per share (EPS) grew at 9% year over year, showcasing stable investor returns. So this graph shows you the revenue, profit after tax and net profit margin of different fiscal years starting from 2021-2022 till 2023 to 2024. So from the year 2021 to 2022, we had the revenue from nearly 5,000 crores. It went up to nearly 9,000 crores in fiscal year 2023-2024. Profit after tax was around 200 crores in fiscal year 2021-2022, and it went up to 461 crores in fiscal year 2023-2024. The net profit margin was 3.6% nearly in 2021-2022. The net profit margin went up to 5.1% in the last year, 2023-2024. There has been an overall 200 crore jump in profit after tax from the last couple of years. Now let's talk about the earnings per share (EPS) growth. From the last fiscal year 2021-2022, it was 0.45, and now 2023-2024, the EPS is 1.01 rupee. Valuation is critical for investors. Vishal Mega Mart's IPO is priced at a PE ratio of 28x, 28 times, slightly higher than the industry average of 25x, signaling moderate premium expectations. So compared to D-Mart's 45x and Reliance Retail's 35x, it seems reasonable considering its growth potential. So at rupees 78 per share, the PE ratio is 77.23x based on fiscal year 2023-2024 EPS of rupees 1.01. If we do the industry comparison, D-Mart PE of 98.23x and Trent Limited had a PE of 163.59x. Vishal Mega Mart is competitively priced but leans towards the higher side. Now let's have a look at the grey market premium (GMP). The GMP for Vishal Mega Mart is approximately rupees 25 per share, suggesting investors' confidence. So this indicates a positive sentiment, but keep in mind GMP trends can be volatile closer to the listing date. Now let's talk about the positives of the investors. The positives for investors is that the steady revenue and profit growth of the company, competitive pricing in a fast-growing retail sector, and expansive network targeting the price-conscious consumer. The cautionary notes. So the valuation appears stretched compared to its peers. It has limited online presence in an increasingly digital world. Now let's have a quick verdict on this. Now as a verdict, I would say long-term investors looking for stable growth may consider this IPO, while short-term investors should evaluate listing day performance based on market sentiment. So to wrap up, Vishal Mega Mart's IPO presents an exciting opportunity for retail investors, but only if you align with its growth story and have that risk appetite. Diversification in e-commerce and a strong post-IPO execution plan will be very crucial for its long-term success. But at the end, it's up to you to decide, as you are the investor and you are a smart investor. But just in case if you are confused and if you don't know about the IPO launch, how to get the IPO, how to put your money in stock market safely, we have a dedicated course, not just one, multiple courses regarding stock market, regarding IPO launch. You can have a look at it at just $399 on Freedom app. Please make sure to download the app and start learning from today and become a smart investor. So that's all for today. Thank you for joining our analysis. Stay tuned for more updates and more videos on financial world. Until see you next time, invest wisely. And yes, please make sure to subscribe if you haven't yet. Drop your comment and yeah, like the video before I say bye-bye.